All right, hey everybody. My name's Connor, and I do options trading. So I'm just going to be looking and setting up a few trades, showing you the strategy technique that I kind of use and apply, and what I look for. So let's get started. I like to use this website, FinViz. First of all, I like to trade around earnings. I trade on Fridays. Today is Friday. It's about 3:30. Market's about to close, so I'm going to make a couple entries, and what I like to do is make theta over the weekend. And I just hope price goes nowhere, but you make theta. And I'm trading stocks that earnings reports are coming out next week. And so let's take HAL, for example, HAL, oil and gas company. I'll go over here on, this is the Trader Workstation, Interactive Brokers advanced desktop platform. So I'll just go to HAL and we'll look at the options chain. So I like to do diagonals. I do put diagonals, bullish put diagonals and bearish call diagonals. So they're kind of interesting. I'll show you how I kind of set them up. We'll start with this UAL actually. And UAL has its earnings report come out July 17th after market. So we won't want to hold this to that earnings report. We will want to get rid of that before then. If anything, we're going to get rid of it on the Monday, which is July 15th, as soon as the market's open, just to make that free. So we'll take this example. We'll go here and I'll set up an options. So based on how price is going on the UAL here on the bottom right corner, it's going down. So I'm going to set up a call bearish diagonal. Essentially what you want to do. So the front month will be the month, will be the week that the earnings report is in. It's on July 17th, so it's before this. So what we're going to do is we're going to sell this front month. And we're going to sell it around, see delta, this column. We're going to sell it around, we want 25 delta. And that gives us approximately 25. That's almost the equivalent to the probability of being in the money. So I'm going to sell this. So that's the first leg. And I'm going to add a second leg, call. I'm going to buy back 2 weeks later, so not this week, 2 weeks later, I'm going to buy back something further out that's about half the delta of the front month. So 25, 26 was that delta, so we'll pick something like this, 13. And you'll see this price, 39 cents, is about half the price of what the short front month of the diagonal is. So we got this set up, limit. I'll show you the payoff diagram now. So we'll look at the payoff diagram. We'll have to zoom out. So this has a very high probability of finishing in the money. We'll go to this price point here, about 50.19. So at expiration, that's the break-even point. But we're just going to check here 3 days from now, so on Monday, how much delta we're going to make. Right now, the P&L at this point is minus $4. That's after the difference in the spread that we pay on the entry. So, but at July 15th, how much will it be worth? How much will delta increase? It says here, or sorry, theta. How much theta will we make? So 8.2, it says here each day. So in 3 days, we'll probably make about $25, assuming price doesn't go anywhere. So it's 14 there. Okay, one more day, and it will be 14, one more day, and it will be, 23. So essentially, price is currently at 44.86, which is right here. And now break even just went all the way to 47. So essentially now my new break even is about 47 on July 15th. So price just has to stay below that. Where's this right here? So as long as price doesn't close that gap on Monday when it opens, then it's free, easy money, and which it should be. The week leading into an earnings report, there's not a lot of price action the few days leading up to it. There was this gap, but then this should just stay sideways for the next couple days. until earnings comes out. So it's a pretty safe bet. And then, so I'll just transmit this. Let's see, bid ask, minus 35. So I'm buying this, but we want to buy it at the lowest price we can. It's saying ask is 0.35. I'll start a bit lower. Override. And the order should pop up here. It's showing the bid is minus 0.43 and the ask is this. You got to go typically closer to the ask. Normally, this is just a demo account I'm showing this on, but typically you'll get filled. If it was 39, this mid price, then you'll get filled at 37, typically about 2 cents above what the mid is what I've noticed. You get filled on real accounts. But this demo account, I might have to go all the way up to minus 35 cents. And what this minus 35 cents mean is I'm taking in a credit. I'm actually, the option I short is for about 70 cents, and then the one I buy is for about 35 cents for a net total of minus 35. So I'm receiving a credit here. So I'll update this. Let's see if it fills. No, still not. We'll just go to 35. I'll have it fill. Sometimes this demo account isn't great. If you're not getting the fills that you expect, just enter your fill as 2 cents below the mid price. Or sorry, 2 cents above. And that will give you the approximate entry price. These demo accounts are really weird and wonky sometimes in terms of their entering. Well, we'll just do a market order and see what it fills at. There must not, yeah, normally it would fill, but it's not right now. But yeah, that's my general strategy. I also like to add, I'll do one more quick one that is set up. You can do a purely neutral strategy. So I'll do the same thing that I just did before, but then also add a put to it. So we're going to do go here. Buy that. And then we'll do the same thing, but on the put side. So up here, we'll find negative 25 delta, which is that 42. We'll sell that. And then we'll buy, I might have to add some more strikes here to get half that. 12.13. 12.13 delta is what I'm looking for down here. Right there. All right. So I'll buy that. Okay. Now we're pretty much set. Check out the profile. I'll be on neutral now. So this is pretty. So now when the date goes over the weekend on Monday, the break-even points of the current value on Monday will be between this 42.28 and 48 about. And by doing this, this increases our overall reward in the middle and also decreases the potential loss if price goes way down or way up. Yeah, so this is the type of strategy I like to use. So you enter this. Let's see this. It's another way to see what the probability of me staying within this range by expiration. So this is 48, and that was 42.5, we'll say. What we can do now, so we'll look on the graph. So that risk, I needed it to stay between here, 48, and 42.5 by Monday, just over the weekend. It can't go outside that range, and I'll make money. So that's what I want. And then now we'll check out those. So by July 19th, the probability of us finishing between that price range of 42.5 and 48, we can look up here. By next Friday, what's the probability that it will stay within that range? So 42.5 is about, we'll say between these two. So we'll say it's about 29. So there's about 71% that it will be above 42.5. We'll check the other one. 48. So there's 72% it will be below 48. But you add those two together, minus it from 1. What's the probability? 20, 40, 55, so 1. So there's a 45% chance that price will end up on Friday between 48 and 42.5. However, I just need it to stay between there by Monday, which is a lot less. It's probably about a 70% chance probability of that happening. So yeah, so that's the strategy. That's how it goes. I hope you enjoyed it. We'll try to transmit this now. And that's it. All right. Thanks for listening. Thanks for watching. That's the strategy on how to make kind of free theta over the weekend. You just got to measure and map out the price ranges and the probabilities, and if it's realistic of you making that. Also, you'll want to add in a stop loss order in case tomorrow there's a huge crash. It will limit the amount of loss that you will receive on that. Great. Have a good day. Thanks for listening. Take care. Bye.